Using credit cards, many types of cards are available. Credit cards, charge cards, affinity and private label cards, secured credit cards, and debit cards. Know and understand all terms related to the use of credit before accepting and using. Fees, such as annual fees, over the limit, late fees, and balance transfers. You should know all annual percentage rates or APRs, purchases, introductory balance transfers, and cash advance. Credit history. Credit history is a record. It includes elements of your credit report. An objective summary of your credit history is a credit score. It's a 3-digit number assigned based on a formula for details of your credit report. A record of your credit worthiness, used by lenders, insurance companies, landlords, employers, a measure of how you have handled your finances. Creditors report aspects of how you use credit to credit reporting agencies, CRAs. The big three are Equifax, Experian, and TransUnion. You've probably heard of those before. They record the data that is provided to them and compile it into your credit report. The FACT Act provides consumers the ability to receive one free credit report from each of the 3 CRAs every 12 months. Websites you can visit, or a website you can visit, www.annualcreditreport.com. Credit score can be purchased for a nominal fee. Check every 6 months to look for errors, especially before large purchases. Credit scores. So your credit score is a 3-digit number calculated from information in your credit report. Credit scores make loan processing faster and more objective. Earliest use were for mortgage approvals, used now by many types of organizations, employers, insurance companies, colleges, and universities. Many types of credit scores. The most popular is the FICO from Fair Isaac Corporation. Vantage Score, Credit Score, newer but not in widespread use. FICO ranges from 300 to 850. The higher, the better. Know which score you are viewing. Managing your credit score. Learn about these investing concepts. Make all payments on time, every time. Keep balances to less than 30% of available credit. Only apply for new loans or credit when needed. Be cautious when closing older accounts, as it could shorten the amount of time it appears you have been using credit, and aim for a good mix of credit. Let's talk about the 3 C's: credit, capacity, and collateral. Also known as credit is also known as character. Your credit history, credit score, how you have handled previous debts and loans. Capacity, your ability to make payments for a new loan, takes into consideration your income and current debt. Your debt to income ratios discussed earlier will influence lenders' decision. Collateral, anything of value that will help secure the loan if you cannot make payments, home auto, etc. Now we're at another activity, talking about preparing to borrow. You are hoping to buy a car in the near future. You feel you have been managing your finances adequately and have saved for a down payment. You have been late with a few credit card payments recently. You have never checked your credit report and recently had a concern you were possibly a victim of identity theft. Outline what steps you should take and when you should take them in order to help improve your chances of being approved for an auto loan at the best rates and terms available. Let's talk about loans and debt. Make sure any new debt fits comfortably within your budget. Use the 28-36 debt-to-income ratio as a guideline. For example, no more than 28% of your gross income for mortgages or rent, including property taxes, insurance, association dues, etc., and no more than 30% of your gross income for all debt payments. A good example would be, if your monthly pre-tax salary was $3,000, then the total debt ratio would be 0.36, which would equal $1,080. The monthly pre-tax salary of $3,000, so your housing debt ratio would be 0.28, and that would equal $840. So therefore, no more than $840 for housing-related expenses, for example, mortgage, rent, taxes, and insurance, and no more than $240 for other monthly recurring debt. $1,080 and $840. Being prepared, saving for emergencies. Obstacles, some smaller, some larger, may sometimes get in the way of even the best financial plans. Build your cash reserves to help during times of crisis. Rainy day funds of $1,000 to $1,500 can help with similar expenses. Emergency funds containing at least 3 to 6 months or more, depending on your personal situation, can help through larger, more financial pressing issues. Build these reserves gradually, but make them a priority. Keeping safe, liquid, and easily accessible accounts, saving or money market accounts or CDs. Make sure you can get to them. So activity 3, emergency funds, building cash reserves. After a recent promotion and paying off some debt, you find that you can now save 10% of your income. You have only $1,000 in your savings account. You wish to start being more proactive in your financial planning and heard recently about the need to have an emergency fund. Must have taken one of these classes. Let's talk about insurance. Being prepared is also about having proper insurance coverage. Life insurance can protect finances by paying a beneficiary a lump sum of cash, otherwise known as a death benefit, when the insured dies. Money can be used for paying off mortgage, college expenses, etc. 2 types. You can have term. Coverage is set for a specific number of years, or you can have permanent. Coverage is designed for a lifetime protection. Make sure you get some advice when you decide whether it's going to be term or permanent. Insurance. You also have disability insurance. Replaces some or all income in the event temporary or permanent disability. Health insurance provides medical or health care coverage, including doctor's visits, medicines, etc., and other types of insurance. Home/renter's insurance, auto insurance, long-term care insurance. Be sure premiums fit the budget. Keeping safe records. Keep your files organized and in a safe place. Document and have handy a list of all pertinent financial information. Credit card account numbers, customer service 800 numbers, list of other creditors, list of where your assets are located along with phone numbers. Keep your files clean, throwing away unnecessary statements. More are available online. Others keep up to 7 years. Buy and use a shredder. Cross-cut shredders can be purchased for $25 to $50. Let's talk about identity theft, account fraud, data breaches. Protect your identity and personal information at all costs. At home, buy a shredder for old statements and keep other sensitive information under lock and key. Online, be sure to verify you are entering any personal information over both a secure connection and on a secure website. Look for the S in the URL and look for the padlock icon in the lower corner of secured sites. Never provide sensitive data to email or phone requests where you did not initiate the contact. Identity theft continued. If identity theft happens, this is what you need to do. Number 1, you need to contact one of the 3 major credit reporting agencies and place a fraud alert on your report. Number 2, you need to file a police report. Number 3, you need to contract your creditors and close any accounts that have been misused or opened without your authorization. Number 4, you need to file a complaint with the FTC. Other resources are the 2 websites that are listed. Fine-tuning your finances. Almost done. Ways to get back on the right financial track. Save more. Generate extra income. Downsize autos. Sell unneeded items. Spend less. Scale back discretionary spending. Reassess financial goals. May be necessary to scale back or eliminate completely some goals. Delay a vacation or home purchase by 1 year. College education. Start a public or junior college, then transfer if the goal was to attend a more expensive private university. Delay retirement. Save more and spend less those extra years in the workforce. All right, we're almost done, actually. Let's wrap up. Over the next few weeks, take time to think about, then write down your short, medium, and long-term financial goals, including projected costs of each and how much you will need to save to achieve them. Set up a budget or refine an existing one, being sure to include saving money. Calculate how much you'll need and save each month so that in a year you'll have it established. A rainy day fund, $1,000 or $1,500 is a good thing to have, and an emergency fund containing at least 3 to 6 months worth of living expenses. And of course, we want you to visit us at www.yourmoneycounts.com. Congratulations, you have just completed our online workshop entitled Your Financial Foundations. Now we would very much like if you would continue on and take the survey. We hope you found the workshop educational as well as entertaining. We hope to see you again at one of our community events or another online workshop. Once again, this is Antoine Diggs, and I have been your workshop facilitator for this online event.